Welcome to the daily update, where I'll go over the action in the market from Monday, December 18th, and then we'll see how things look for Tuesday, December 19th. We had another up day. There wasn't a real strong conviction behind the buying, but to take it another way, we're not really seeing any conviction with selling. So for right now, the market's just willing to ride along with what's been happening. Now, this could change at any time. But it was rather encouraging to see that even though some folks have made some pretty good profits, we've had a good run up. We're not seeing a lot of selling into strength, at least yet. Now we're coming into a negative seasonal day for Tuesday's session, and we'll have to see if it plays out that way. And we're kind of switching more into holiday mode where volume dropped down below average. Now it could pick back up as we go later on in the week and get some more economic reports. But at least in Monday's session, things ended up being rather subdued. So let's go back and talk about what happened. Right at the open, we had a higher open. Futures were positive, and we ended up taking that into the cash session. Prices climbed above R1. Now, it didn't take much to get to our levels in Monday's session because Friday's session was so muted. Monday's levels were calculated based on what happened on Friday. So I actually calculated R3, but we didn't get up to that level. But R1 was at 47.28, and we got up to R2 at 47.37, and we almost got up to R3, but I didn't put that on the chart because we didn't quite get there. Then prices drift higher. We hit resistance at 47.50, another round number, another area that's easy to report on for the financial media. There's probably a lot of strike prices in open option contracts at that level. And then we came down a little bit off of that going into the close. We were up 0.45% on below average volume. Now, volume was still fairly healthy, but it just dropped down to below average. And we are positive, but we're really overextended in the short and intermediate term. I sound like a broken record there. We've been that way for a few weeks. But the fact that we are in such an overextended condition and we're not seeing a lot of profit taking or things actually moving down to this point is positive. And there was some more Fed speak that came out in Monday's session that I'll go through here in just a moment. We're keeping an eye on the geopolitical events and then any economic reports that'll be coming out later on in the week. So some comments. 47.50 is now acting as short-term overhead resistance. We could break through that with another upward move. It's just a round number where the market ended up stopping. The mega caps had a pretty good day. We're seeing a little bit more profit taking in the small caps and a little weakness in the mid caps. This is supposed to be the January effect, so we don't want this to last too long if that is going to end up continuing. There is a real lack of conviction when it comes to selling, and there's the FOMO, the fear of missing out. A lot of folks were really surprised that we started to turn and come back up from the lows that we set back in October, and they're like, oh my gosh, I need to get in. I need to try to make some profits before the end of the year. That's sometimes when we start to get to the point where the party is just about over, at least on a short-term basis, because these folks are using emotions to dictate what they do. And when you do that in the stock market, you're right just enough to justify that you know what you're doing, but you're wrong a majority of the time. And it ends up being more advantageous just to try to follow along with the charts. The NASDAQ 100, it did have another advance in Monday's session, so that created another new all-time high. Here's our short-term list of overbought or extreme positive indicators. We still have the ADX. That's still showing no signs of rolling over. The 20-period exponential moving average, the Stochk RSI, Williams percent R, CCI 14 and 20, the stochastics. Those are usually on the list whenever we have any kind of an up move. The PMO oscillator is still looking really extreme. The RSI based on 9 periods and the boom indicator based on 20 periods. Then on the intermediate term, and this is kind of a long list to read off here, we have the intermediate term ADX. That's still extreme. The 50-period exponential moving average, the standard deviations chart, the rate of change going back 50 periods, the Arun indicator, our PMO studies, the Sean trend meter, the Chaikin money flow, the Chaikin oscillator, the balance of power, the CMB composite, the bullish percent index, both for the S&P and NASDAQ 100, the percent B indicator, the boom indicator based on 50 periods, the ultimate oscillator, and the new high and new low study for the S&P based on 10 periods. Long term, we're still looking kind of extreme with our 150 and 200 period moving average study. And then we're now kind of switching over the scenario just a little bit that possibly the Fed is done raising rates, and the market is starting to anticipate the idea that the Fed will be cutting rates going forward, with the first one possibly happening in March. We don't know if it's going to play out that way. The market always comes up with scenarios. Sometimes they're right, sometimes they're wrong, but they still build this scenario anyway. The dollar was up and interest rates were also up, and that put a little bit of pressure on stocks. We're at 3.96 now with the 10-year yield. That's below the 4.02% level. The 10 to the 2 and the 10 to the 3 month for about a year and a half now, specifically the 10 to the 3 month, it was the last one to go inverted. They still remain inverted, and sentiment is now extreme. This is where we start to see a little bit too exuberant of a market. We're getting above that 75 level now. We're at 77 where we had been at 67. And our trend is still positive, but we're well above 40, both with the ADX and with the moving averages and with the green line. So both in the short and intermediate term, we're seeing that. However, our bias is positive since we had the up day, and the last number of days have typically been positive. So our momentum is still looking solid. Then some Fed speak that we did get. Chicago Fed President Goolsbee, who is just getting ready to end being an FOMC voter, said that he was a bit confused by the market's reaction to the latest FOMC meeting or comments that were made. Okay, I'm not sure why, but again, this not only is this the Federal Open Market Committee, it's also the Federal Open Mouth Committee. These people love to talk. They're economists. They don't get a lot of attention otherwise, and they have their different approach to things, and so sometimes they like to speak. Cleveland Fed President Mester came out, who will be a voter in 2024, said that the market is a little bit ahead of the Fed's rate cut view. Well, yeah, the market always tries to anticipate what is going to happen. And then San Francisco Fed President Daly, who will also be a voter in 2024, said that she thinks it's appropriate for the Fed to begin looking ahead to lowering rates in 2024. So we're getting kind of some mixed pictures here as these folks debate things back and forth. Of course, that's kind of the joke, is what do you have when two economists have a discussion? You end up with three opinions. And then the markets right now, anyway, and this changes every day. We were looking at the possibility of 2 rate cuts, then 3. Right now, after Monday's session, the markets are pricing in 6 rate cuts in 2024, with the first one happening in March. But this is going to jockey around and change a lot between now and March 2024. We just had the NAHB Housing Market Index that came out for the economic reports. It came in at 37. They had expected it to be at 38. Last time it was at 34. Here's a chart showing a little bit of a pickup. It wasn't as strong as they thought, but we are seeing some improvement there. Here's the intraday chart where we gapped higher. And again, because of Friday's session being so muted, it didn't take much for the R and S levels to be calculated or to reach those levels. We went up above R1 right at the open, got up to R2, danced there a little bit, and then we drifted higher up to this 47.50 level, and then came back down just a little bit going into the close. Here's the intraday chart where we did see some initial positive reaction in the afternoon session. This pink area right here, this is Friday, and then the lighter blue area, that's when futures start trading Sunday afternoon or evening, depending on where you're located. And we were still maintaining some gains. We didn't see any real gaps or real big moves. And then that carried over into the cash session. And we're down just a little bit in the initial overnight session for Tuesday. And we're seeing a little bit of an improvement here with growth, where the blue line is now on top of the red line. And we go through some of the charts and we're seeing just little hints that maybe growth is showing a little bit of life right now. They were both positive, so that's good. But we want to see the blue line really outperforming the red line. Intraday, we're also seeing some improvement when we look at the growth to value ratio for the S&P, where it did outperform and is showing a little bit of improvement. We're seeing more of a continuation of this upward movement. And that's what we want to see if we're going to be more positive on the market. The other alternative is if we see growth really underperforming value, sometimes that's an anticipation of the smart money anticipating some kind of a pullback, maybe at the beginning of the year. That's just a scenario. That's just a thought to keep in the back of your mind. If we see an improvement continue with growth to value here on this chart, that might end up helping to produce higher prices as we work through the holiday season and get into 2024. Here's an end of day chart where growth really did outperform value. With the large caps, it was about same for the mid caps, even though both were up, and growth did outperform value for the small caps, where for the small caps, it was up and ended up being down for value. And we're seeing a bit of a tick up here, not a big shift looking more positive, but the fact that this is going back up is positive. We have been chopping sideways. We're kind of now at the lower end of this range that we've been in, even though it's still a longer term uptrend with the blue line above the red line. Looking at our trend, we're just continuing to go to the moon. The ADX is at 50. Haven't seen a reading like that in a long time. We're well above the moving average, and the blue line is also above 40 and continuing to advance. This is pretty overextended on a trend basis, and we're even more overextended here in our short-term ADX chart, above the moving average, green line above 40. Volume came down a little bit. We had a monster volume day last Friday because of the quadruple witching and the rebalancing that went on. So the fact that it fell back a little bit is not really a surprise in Monday's session. Here is sentiment where I'm kind of trying to guess where we're at here. The VIX is still very low, even when you compare it to an average from 1990 up to 2022. So maybe we're still in this period of time where the VIX continues to fall. When we look at another fear gauge, the ulcer index, we continue to be very low. And since about the middle part of November into December on the daily chart, we're just seeing not a lot of fear as measured by this indicator. We ticked up just a little bit with the VIX on the line chart as well as the bar chart, but still we're getting quite low readings. And we're seeing volatility of the VIX picking up just a little bit. There may be some additional hedging going on here as prices are moving around. The skew index is still generating something that we need to keep an eye on. We're up in this red area. We spiked and we're starting to come down. We have not dropped down out of this area yet. Now, this doesn't necessarily mean we're going to have a fall. It could mean that. It could mean that we're just going to keep going up, or it could also signal that maybe we're going to go up with a little more vengeance from here. But we get all kinds of readings from this chart. So we have to look at other charts to get some better overall context. Looking at the equity put call ratio, we saw it tick up just a little bit on an up day. Maybe there's some hedging that's going in there, just a little thing to be aware of. When you combine that with the skew index that we just looked at, maybe they're looking at some kind of a pullback. And the equity put call ratio based on 5 periods, it's starting to go back up, and now it's turning back down. So this is more longer term, and we're not getting an extreme reading currently. When we look at this fear gauge, we ticked up just a little bit in Monday's session. It's like folks are they're getting a little bit more defensive right now. And we are still seeing some improvement here. I actually drew in a blue line to show that the risk on to risk off ratio is showing some improvement. That's a good sign. Even though we were down a bit in Monday's session, the idea that this is going back up is positive. Our advanced decline line, we were pretty much flat based on price. We declined just a little bit based on volume, but we're still looking pretty healthy above both of the moving averages. And we did see a drop off in the new highs with the S&P 500. We're still going sideways with our 5 period, and we actually ticked down just a little bit with our 10 period. And the advanced decline ratio, after getting extreme with the blue line, we're coming back down, but we're still looking positive even though we saw a decline. But when you look at accumulation distribution, this is still looking pretty healthy. And we're actually getting kind of far away from this moving average. We don't usually get all that far away before we see it start to come back. The chicken money flow also could be giving us an extreme reading. It's still positive, but when other times when we got to a really high reading like this, sometimes we saw a bit of a pullback. When we look at the cumulative advanced decline line for the NYSE, we ticked up just a little bit. We were actually down to flat with the regular NYSE advanced decline line. We turned down just a little bit with our other NYSE advanced decline line. We're coming back down based on price from where we were breaking out with the common stock on the NYSE, and we did see a decline, but not down to this breakout point when we look at volume. And when we look at our advanced decline line studies, we were pretty much flat with the NYSE common stock, a little bit of an advance with the S&P and mid caps, where we actually showed some decline with the small caps. Then we're still looking okay here. This chart is still showing pretty healthy movement with the green. That means that we were up. We're still above this pivot level here. And we don't really have any, you could pick out some resistance along the way here, some previous pivot points, this previous high. But for right now, based on just looking at the chart, we're still holding up fairly well. And we're just a little bit below the moving average when we look at volume. We're still extreme with the 20 and 50 period exponential moving average studies. We're turning down just a little bit with the 200. The boom indicator based on 20 periods, this measures how far away are we from the moving averages. We're still extreme with the 20 and the 50, where we're still showing more improvement with the 200. The Stochk RSI is still extreme, as is the Williams percent R, the CCI 14 and 20. These are the usual charts that anytime we get moving, they quickly become extreme in one way or the other. The force index turned up just a little bit. We're still above the midpoint and we're well above zero. So that is positive. We're still extreme with our short, intermediate, and long-term stochastics. And we're well above the +3 standard deviation. We've gone up pretty far, pretty fast. This is also suggesting that we are overextended. Looking at some intermediate term charts, we still have the balance of power, which is extreme positive. The go, no go continues to be positive with darker blue bars. We're still hugging the blue line of the highest high value here, and the midpoint is continuing to go up. The TTM squeeze is showing a little bit of improvement with the lighter shade of blue and turning back up. The CMB composite is still extreme positive. We're turning up a little bit, but we had been flat with the ease of movement. The Arun indicator is going back up and still looking a little extreme positive. And we're starting to break out continually now based on price, and we're turning down just a little bit based on volume. Is this giving us a bit of a warning sign here? But when we look at the summation index for the NYSE, we continue to advance based on price and volume. We're turning down another potential warning sign with the Swenlin trading oscillator based on price and volume. The PMO is going up well above its moving average and giving us a pretty extreme reading. We're also still positive based on price and volume. We're no longer extreme with the PMOs that are rising. We're just about on the line with the buy signals, and we continue to be extreme with the PMOs above zero. On a trending basis, the elder impulse system still has the S&P positive, and we're still positive with the parabolic SAR. The slope is going back above its moving average, but also giving us an extreme positive reading. The MACD is also positive, and other times this often marked an extreme positive reading. So when we look at all of our oscillators, the slope and the TSI are really extreme right now. Those are the short-term oscillators. The MACD, the PMO, and the PPO also looking extreme, but still are positive. We're positive with the tricks, and we're just slightly coming above the moving average with the KST. So we're positive here, but all of these are pretty much pegged to an extreme positive reading. We're still above all of the plotted moving averages in our moving average tree. We're also extreme with the bullish percent index for the S&P. We're still looking positive with the NYSE bullish percent index and not extreme, where we're still getting a really extreme reading with the NASDAQ 100 bullish percent index. The Sean trend meter ticked down just a little bit, but it's still extreme positive. The Chaikin oscillator continues to be extreme positive. The money flow turned up just a little bit, but we're still above 50. It's not extreme, and it's still positive. The ultimate oscillator is still extreme positive. The vortex shows the green line going up. That is positive. And the percent B, we spent now, 3 trading days above the upper Bollinger Band? That's very rare for that to occur. We have a new one. The Copic curve is now crossing above the red line. That is turning positive. The RSI based on 14 and 9 periods continues to be extreme positive. On balance volume is still looking positive. The rate of change going back 50 periods, we're just barely extreme positive here. And we're getting up to this 90% level with our 200 period and our 50 period moving average study. And a lot of times this is where things can get overextended to the upside. We saw a little bit of a pullback with the 200 and also a little bit of an advance here with the 50 period moving average study. I don't have any Fibonacci or line charts to show you. We're well above all those lines for right now. So we look at a trending analysis here with our different looking charts with the hike in ASHI. We are still positive. We're still positive with the KEGI, the Renko, and the 3-line break. Long term, we're still looking extreme positive with our 150 and 200 period moving average study. We're above this longer term resistance line or trend line. This goes back to the 1987 crash, and the fact that we're above this is positive. Now we're wondering, are we going to be able to stay above this line? And we're coming right up to the line with the NASDAQ 100 going back to 2009. We're wondering, is this going to provide some overhead resistance? Looking at some indexes, we're seeing a real improvement with the equal weight index, but it did underperform in Monday's session. And we're coming back up a little bit with this ratio, meaning that the mega caps outperformed the equal weight S&P 500. We were up, well, we were pretty much unchanged with the Dow, where we were actually down with the transports. That's another warning area. The transports really haven't been participating in this upward move. We did decline with the utilities, and the transports continue to underperform the Dow, but the Dow is still looking okay, even though it was unchanged. We're above this R1 level, and actually, anytime we have an up day, that's a new all-time high. The diamonds, though, have switched over to neutral for the Elder's Impulse system. The NASDAQ also had an up day above this R1 level. That's still looking pretty healthy. The NASDAQ 100 also had an up day, setting another new closing all-time high, and is above this R1 level. And we're still positive with the QQQs. When we look at the Elder's Impulse system, the momentum for the NASDAQ 100 continues to be positive with the PPO. And here is the weekly chart showing that we are setting new all-time highs here every time we have an up day. The small caps, they gave back about 0.25%. It was another inside day here after they really had been spiking up. And the Russell is still extreme positive when we look at the RSI. We're still hanging out above this other resistance level here. So for right now, support continues to hold. We're still dealing with a longer term downtrend, but on a shorter term basis, the MACD continues to be positive. And we're switching back to neutral for the Elder's Impulse system for the small caps. The mid caps also had another inside day, not an awful lot of movement, still a longer term downtrend. And they've also switched over to neutral for the Elder's Impulse system. The financial sector was up again, seeing a lot more of an improvement here. The micro caps were up just a little bit. They're getting more up into the 112 region. The FANG index was up over 1% and continues to be quite positive. And we're continuing to set new all-time highs with the FANG index. The dollar bounced back up after it saw a lot of weakness, and it's still in a longer-term uptrend. And we were up just a little bit when we look at the 10-year yield, and we were down just a little bit based on price. And this is still, we're still seeing this. When we take the 1-month yield and subtract the 3-month yield, even though it's coming down, we're still getting a positive result. Logically, we should always get a negative result. And then I wanted to show the growth to value charts. I haven't included those in the daily video for a while. We're seeing a bit of an improvement here with the Qs to S&P, also with discretionary to the S&P. But large cap growth, the large cap value, it's coming right back up to its moving average. When we look at our other growth to value ratios, seeing a little bit of an improvement with the large caps, the mid caps, and the small caps are coming back up to their moving average. We're still pegged extreme positive with the 10-day average of the S&P 500 highs minus the lows. We're still above zero when we look at the broad market with our moving average study of the highs minus the lows for the Amex, NASDAQ, and NYSE. We're still trudging higher here with the 50-period new highs, new lows study. And interest rates continue to fall overall, which has been giving support to the S&P. So what's our outlook for Tuesday? We are possibly starting to switch into holiday mode. It might pick up in volume as economic reports come out or things happen in the market. We're also dealing with earnings as they're released. We are still extremely overbought, although we are positive. We're breaking out of that range that we had been in, and at least to this point, now this could change at any time, but there has been a real lack of selling conviction. We will get housing starts and building permits. That's seen as a leading indicator, since you have to do those things first before you start actually building things. We're keeping an eye on all the different geopolitical events. Something could happen somewhere that could have an impact on the market. Looking later on in the week, we're going to get the big inflation report, the second big inflation report for PCE prices on Friday. We do have some other reports that will be coming out that may have an impact on the market. Seasonally, we tend to be negative when we go from 2001 to 2021, where December 19th, we're negative across the board with the Dow, S&P, and NASDAQ. We're also in the week now after options expiration, where we tend to be up 64% of the time. We're down 35% of the time. We're wondering if the January effect is going to continue, where small caps tend to outperform the large caps. And when we look at the pre-election year, we'll be on the 13th trading day of the month, where we do see a little bit of weakness, even during pre-election times. And then here's the Carson research showing that we might see a bit of a decline here before we see more positive seasonality. And then we'll be in Tuesday's session, where it tends to be a down day overall in 2023. And then here are the seasonal charts for a pre-election year, another seasonal chart, another seasonal chart, another seasonal chart, and the Carson showing seasonality as being positive. The equity clock chart, we're coming more into the middle part of December, where we tend to see more positive seasonality. When we look at the NASDAQ, it's also positive seasonally, as well as the S&P 500. Then this is something that I got from Isabel Net blog charts, where we're wondering if 1982, that was a very difficult year, but then we ended up bottoming and then having a massive run up that lasted decades after that. Is that what's going to happen in 2023? We'll just have to see if it ends up playing out that way. So our scenarios, we're not going with the down one, even though we are overbought, even though we do have negative seasonality, but we're not seeing any kind of real conviction to selling, at least yet. Now, again, that could change at any time. We wonder if we're going to have one little run up to the upside that ends up being some kind of a blow off top. Not really seeing that yet. The market tends to, over the last few trading sessions, has been more orderly. So we're still going with the positive one, but be aware, we are overbought. We are getting extended. We are dealing with, at least in Tuesday's session, a day that is not positive seasonally. And we're not going with the sideways trend now, because both of our ADX charts are suggesting that we are extreme positive right now when it comes to measuring the condition of our trend. So the warning signs, growth, it's showing a little bit of an improvement, but we need to see more follow through with this. So for right now, it's still on the warning sign slide. And the Russell, small caps and mid caps, even though they've been showing some improvement, they're still dealing with longer term downtrends. The positive list, and this is pretty long right now. The daily special K chart is still positive. The equity put call ratio studies that we do are both going down. That's positive. The risk on posture is showing some improvement. Our oscillators, even though they're getting pretty extreme, they are still positive. The parabolic SAR, the vortex, and the bullish percent index, those are all positive, but the bullish percent index is above that 70 level. We're just waiting to see if it's going to start turning down. The Kopit curve, a new addition to this list, has now crossed over positive. The Zohorchak method, it's still right at 0, and that's an improvement from the minus reading that we were getting. Small and mid-cap growth is still chopping sideways. Mid-cap growth is outperforming just a little bit. It's more at the higher end of the range, where small-cap growth is pretty much just at the bottom end of the range. The financial sector has been showing some real improvement, and our longer-term new high, new low study continues to be positive. So our conclusion, we're still overbought. We are breaking out above previous levels. We have to just keep in the idea in the back of our mind that there might be some kind of a blow off top happening. In the short term, we can say that same thing. We're getting more extreme in the intermediate term with a very long list of extreme positive indicators, and we're a bit overextended in the long term with our moving average studies. So thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.